Welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Naveen Kukreja, and he's taking you through the ABCs of insurance. We are talking about child plans. Some would say that, what about, instead of buying a child plan, what about term insurance or linking it to mutual funds? What are the pros and cons of that? Naveen, can you explain that?
Yeah, Arjun, that's a very good question. Per se, it's not a bad strategy of taking a mutual fund or another investment option and a term plan. However, one area where a child plan specifically scores over any other option, including the term and mutual fund, is that if something were to happen to you and you were to be not there, a term plan also pays out. But what happens is that it pays out to the nominee, let's say, which is typically your family. Your child is still young, and what happens to the funds when the child actually needs it later for his education is something that you don't know. You depend on your family. A child plan protects that risk also. What happens if you take a child plan and if something were to happen to you, the investment stays in the name of the child and is available only for the child to use when he or she becomes 18 and needs the funds. So that's one of the small but very, very critical differences, and that's why child plans are that good from a child planning perspective. That if you are alive and you have planned well, then your child anyways gets those funds. But if something happens to you, the child plan protects that and ensures that the funds go only to the child, which was the original intention.
Let's talk about retirement and pension plans. I mean, that's a concern that many people have. That concern, I guess, grows when you hit your 40s.
Yep.
I don't know if it should be younger, but yeah, 40s it certainly strikes you like it has for me. Tell us about pension plans and retirement plans that a consumer can take.
Arjun, like you rightly said, it's amazing that people do not think about retirement till they hit a certain age, whether it's 35.
No, I'm just talking about myself.
No,
they are very sensible people. Yashish is one of them.
So people start thinking about that and worrying about that when they hit a certain age, and then they, retirement starts figuring in the thought process. And it's also amazing that in India, very, very few people are covered by government pension plan, which is essentially the government employees. Everybody who is not there is not covered by any sort of pension plan.
In fact, that has also become contributory now.
That's also contributory for a certain period and thereafter. Right. And so for all the others who are not covered by pension at all, my urge is to kind of forget them to start thinking about their retirement goal as early as possible. And one of the golden rules for retirement planning is that the earlier you start, the better it is. So for example, once you have a corpus of 12 lakhs, your interest income from that starts to be 1 lakh and above. So your corpus itself starts kind of investing back into the retirement plan. So the earlier you kind of get to that corpus in your life, the better it is, because then the corpus itself will start funding your retirement plan. There are various options available, like I said, in the child plan.
So one clarification: when you say the corpus starts fueling or making your investment, your pension plan bigger, it's because of the interest.
Because of the interest income. So for example, if I were to start at 25 and invest 1 lakh every year and get about 8 to 9% interest on that, in 8 years, my corpus will become about 12 lakhs. And at 8%, it will start to earn interest income of 1 lakh. So a scenario of somebody investing starting at 25 versus a scenario of somebody starting at 33, which is 8 years later.
Substantial.
At 33, the first person will have 2 lakhs going into the corpus, 1 lakh from the investment and 1 lakh from the interest income, versus only 1 lakh for the person who started late. So it can become really, really substantial when you hit the magical age of 60 and when you really need those funds.
Right, Naveen, we're going to take our viewers' questions, consumer questions now. We've got just a couple of minutes to go, but we're going to try and take as many as we can. We've got Neelima from Delhi, and she wants to know how to choose the right insurance agent. And she says she's afraid of being misinformed or conned by an agent. And you had talked about online, buying it online as well. So the pros and cons of both, please.
Nilima, it's a very important question, and it's something that's kind of insurance industry is now suffering with, which is the concern of mis-selling, which is a pretty valid point that you've raised. So my suggestion to you would be that irrespective of the channel that you go through and the agent that you choose, it's your responsibility to know what plan are you buying and know all the details. So instead of worrying about the agent, think about the questions that you want to ask in terms of why are you investing in the plan that you're investing in, and what questions do you want to ask regarding the investment options, the return options, the flexibility options. What if you were to stop in the middle kind of questions? There are currently, depending on your objective, again, if you're investing from a savings perspective, there are options available online and offline. One of the good ways to start would be to kind of go to compare different plans. You could go visit PolicyBazaar or any similar site to kind of look at different options available, what they can do for you from a return perspective, and what are the salient features and restrictions that those plans have.
Right. We've got Alok Pal, and he's written to us. He wants to know if alternative medicines such as homeopathic treatment or Ayurvedic treatment are covered by any insurance company. We've been doing this show for a while, and the first time this question has come.
Yeah. So it's interesting. As far as I'm aware, Alok, homeopathic treatment is not covered by any health insurance plan. Ayurvedic treatment is covered by a couple of insurers, but I would suggest that you specifically, once you've chosen the plan, specifically ask this question from the insurer or the person financial advisor that you're speaking to for buying your plan, or if it's online, ask the person that you're speaking to, or read the document, but get that clarification specifically. Although Ayurvedic is covered by a couple of insurers as far as I'm aware.
Thanks a lot. That's all the time that we have on this show of Policy Bazaar. But I have a question for you, and you do get prizes for answering it correctly. What is the maximum tax deduction that you can claim under Section 80C? So I'll repeat that question for you. What is the maximum tax deduction that you can claim under Section 80C? And so you can reply on the email below, and also at Twitter at PolicyBazaar_in, and we'll see you with another episode next time. Goodbye.